Technical difficulties. Let's get started here. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got out of that AMD. I'm no longer short AMD. Nice little 2-day trade there. You know, we talked about it a lot in yesterday's afternoon meeting. It was a big focus. So, you know, we'll finish the story here on this little trade. So let's jump into the actual content of our meeting here. So, oh, thanks. So, SPYs closed up 0.6%. Qs closed up 0.6%. IWM relative strength, that's our leader, up 1.8%. Let's get a snapshot of the TLT. TLT down today, so it generally is providing relative strength to the IWM, small caps, mid caps, and relative weakness to Qs. And yeah, fine, Qs are relatively weak to the IWM today, but they're still up 0.6%. So pretty impressive, and that's with the IWM, sorry, it's with the TLT still being above that key 150 psychological level that we've been talking about, where maybe we'll start seeing further strength from the reopening type trades, the reflation type trades, should that actually come together. So that's our snapshot of the market. Let's take a look at our big picture technicals here. Let's start with the SPYs, see if we have any change. SPYs are looking the same, more or less. For a little bit today, it was such a tight candle, but then we had this really strong rally into the close. We all day, 441 has been the breakout level that we've been discussing for the big picture breakout of this consolidation in the SPYs, and all day today we struggled to really be able to get above it. It was actually a really boring trading session from the perspective of the S&P, even though there was relative strength there. Last 30 minutes of the day today, we broke out, we closed really strong. So inside day and up here for the SPYs, as we are starting to technically break our very tight bull flag pattern here. S&P is looking extremely bullish. Qs as well. We had the symmetrical pennant pattern, bullish pattern here for the big picture of the Qs. A couple trading sessions ago, we held that 21 EMA again, started to break out. So a good follow through today. And this, again, was not even what was relatively strong. What was relatively strong was the IWM. We spoke about in the morning meeting today that the IWM has been sloppy. 222 has been the key level on a closing basis. Well, we closed at 222.03. Does that really count as an actual, close above, break above? I guess technically yes, by 3 cents, but we want a little more confirmation than that. So we'll see what happens with the price action tomorrow. But we did negate yesterday's candle. We did negate yesterday's week close. So the Russell, which has been concerning to me because it hasn't been able to give that close above 222. These 3 tails in a row here were also concerning to me. The Russell is looking a lot better as of today's close. So let's chat a little bit about some of the stocks we're talking about in the morning meeting. So there was definitely chatter in the VTF about big tech this morning. Apple, Microsoft, Google were particularly what we were looking at. Apple with this inside day, and then 150 is the big resistance. So we chatted about how if you thought the NASDAQ could provide relative strength today, that this inside day type of pattern, yesterday's consolidation, 147.80, could be a buy price with relative strength from the NASDAQ as a kind of a cheat, if you will, on the much bigger 150 resistance level that Apple needs to clear. So we spoke about that a little bit. We spoke about Microsoft. We saw this tight pattern in Microsoft, the support being down here at about 284, and your level 1 for continuation being basically 287 quarter, and then level 2 for continuation is 290. So Microsoft clearly broke level 1, got up to level 2. The other one we spoke about was Google. In some ways, I think this Google is the best looking chart of big tech. Microsoft's my favorite company. Google, probably best looking chart right now. Had solid earnings, gapped up on the earnings, pulled back to the ADMA, gave a good little tail 2 days ago, inside day yesterday. So today we have an inside day up in Google. But really being involved, I think, in these big tech names, Apple, Microsoft, and Google, I feel like you were relying on continued relative strength from the NASDAQ today. And look, we got an update for the NASDAQ, but the NASDAQ was not where the relative strength was. And I talked about this in the morning meeting, and I spoke about that I didn't feel confident that we were going to see relative strength from the Qs today. I spoke about that I kind of thought that we were going to see relative strength from the IWM. And I also said you should take that with a grain of a grain of salt, because I had no basis in saying it. I had no basis in saying it outside of I just kind of felt that the IWM was going to be relatively strong today compared to the Qs. And the truth of the matter is, that is not a good reason to be thinking I should be along the IWM versus being the Qs. If a trader says to me, especially like a newer trader, newer in the business, says to me, oh, like I took this trade based on feel, I totally roll my eyes like, you got to be kidding me telling me you're trading based on feel. So I hate when traders say to me that it's something based on feel, that's what their decision-making process is. And at the same time, as I said, I hate that, I was also telling you guys I have no actual technical basis at all in believing that the IWM can be relatively strong today after it had a really weak close, and the TLT, at one point pre-market, the TLT I think was even positive, though by the time we opened it, it opened negative, but it's still above 150. I had no real basis in thinking that the IWM would provide relative strength compared to the Qs that I could point to outside of feel, which honestly, again, it's a terrible reason, but I don't know. I've been in the business for a long time, and sometimes when I feel a certain way about things, it does happen to work out that way, and that's what happened today. Though, if you focused on Apple, Microsoft, and Google today because, well, that's where the relative strength has been. It's been in tech, and they all had decent setups coming into today. I think it was the right idea. Microsoft in particular gave good follow-through. I think we saw some bullish option sweeps hitting Microsoft into the close. Google, a little bit of follow-through. Apple, maybe not so much. But those were some trades I know some of you guys were focused on. For me, I had a list of names today that I was focused on, and honestly, look, I don't want people to think I'm the end-all be-all when it comes to trading, but today, for what it's worth, the ideas I had in the morning meeting were all really solid. First was this win. You guys provided the information that win got upgraded. So, we had spoken about win and LVS, I think, in yesterday's afternoon meeting, that you have all these technical signals that indicate that win and LVS are a buy, but there was no, like technical indicators were all saying it was a buy, but we never had the actual technical trade come into place on these names, and then win caught that upgrade. So I was referencing, being long win versus like an opening low or a pre-market low or possibly even yesterday's low as a trade for today, based on the fact that all those signals were coming in, the thing was massively oversold, and it caught the upgrade. So that one turned into a really solid trade if you were taking this off the open. If you bought in this first bar, you could use 92 as an out. I like the idea of buying this right off the open versus the pre-market low. I don't remember what that pre-market low was. We can take a quick kind of look here. Pre-market low is about 92.12. So that actually may have pushed you out on this first 5-minute bar, and the other possible out would have been yesterday's low, which is a little bit more space. You have to assess if the risk reward is worthwhile for it. But if you're able to get stock in this thing off the open, kind of based on that idea, obviously it worked out really well. Another one I spoke about was Viacom and Discovery. These are names that I've had on my radar ever since the Archegos blow up. I love the idea of being long Viacom. I've even tried it on a couple occasions. Fundamental people I speak with really like it as well into these areas. But again, every time this thing is attempted to go, and it's kind of been on a couple occasions, and that's when I've tried to get involved in it, it's never been able to give any follow-through. And then Discovery, Disca, had its earnings report 2 trading sessions ago, and I thought the earnings report was solid. But we spoke about in that afternoon meeting, no harm, no foul. Because when it comes to earnings names, we want to be trading them in the direction that they're moving. So I liked this Discovery for a long if it got above 29.60 on the earnings day, and it never triggered, right? They sold off that earnings report. To my surprise, they sold off what I thought was a good earnings report, and this Discovery actually broke the absolute low of this entire base that's been formed since the Archegos hedge fund blow up back here. And now, though, with Viacom's earnings, which I thought were decent earnings, Discovery's still on my radar. I like what's going on with Warner Media potentially becoming, merged with Discovery. I think that that's going to add a lot of value should that actually go through. I know there's concerns that it's not going to. And then you had this kind of inside day and up. So I spoke about being long Discovery and Viacom, basically the same chart here, so we'll look at both. I talked about being long Discovery above yesterday's high of 28.58, and that what you really need is you need to clear the earnings day high of 29.28. And if this thing can start getting above 29.28 and closing above there, then you could actually be finally setting this thing up to really start going, just when people are probably just totally disgusted with the fact that this thing hasn't been able to catch a bid. So it's actually the most I've liked these charts in a long time. We got the inside day and up, so that trigger worked it pretty nicely. You got above 29.28 today, but you didn't get to close above. But this is a great initial movement, so anybody who bought Discovery around 28.50 today, you got some pretty good stock here. Those opening lows held that you'd be using as an opening kind of stop loss, little bull flag continuation on the 5-minute chart, and then a decent enough close here where I really like the idea of swinging Discovery long. Viacom was the one with earnings today, but had a very similar chart pattern. Broke down along with Discovery 2 days ago. It never broke the low of that base, which I almost wish it would, because it's going to shake out even more people, but it never did that. But sold off on Discovery's earnings 2 days ago, and then inside day and up today on its. So we spoke about being long Viacom through 39.29, basically yesterday's high, that inside day high. And same thing here, we need to see it clear the negative Maribozu on high volume. Just to talk technical analysis here for a second, why is clearing a negative Maribozu that was on high volume important? Well, think about it. What is technical analysis at the end of the day? The root of technical analysis is the study of supply and demand. What you're really trying to figure out more than anything else, it's not chart pattern memorization. What you're trying to figure out is, what does the price action that is ongoing in the marketplace do to the buyers and sellers who are already in the market? Because if you understand how the price action has positioned people in the marketplace, and you understand therefore who is in the money, who is out of the money, you know what they are most likely going to do next. That's really the key to the entire thing. So what does this negative Maribozu candlestick from 2 trading sessions go on high volume mean? Well, it means that a lot of people on this day threw in the towel on their longs and sold out. It means that a lot of people on this day sold short potentially also. So if you can clear above the negative Maribozu high from that day, what does it mean? It means anyone who sold short on this candlestick is now out of the money, they're getting squeezed. And anyone who is a long seller, they're kicking themselves, oh my God, I knew I shouldn't have sold it, and they're potentially either buying it back, which that's buying, or even if they're not buying it back, they're out of the way. They're not on the offer anymore if this thing actually starts working its way up in a bigger way. So that's why clearing a high volume Maribozu, in this case we call this a negative Maribozu because it's a bearish candle, clearing it to the upside can be really bullish. So you did that after you shook a lot of people out. You did that on really good volume. This is all the stuff that we want to see. So Viacom, also solid trade. If anybody was able to catch it through yesterday's high on this second 5-minute bar, your stop loss is either the low of that 5-minute bar or the low of the day at that point. Beautiful trade, closes really well. Definitely one that you then would want to swing. I think this Viacom right now is looking better than it's looked at, honestly, almost any other point. There's one other time in here where I thought it looked pretty good but failed. It's looking better than almost any other point, I think, now since the stock started kind of moving. So that's Win, that's Discovery, it's Viacom, Walmart. Walmart was the other one on our list. You know, Walmart I do find to be a really difficult trading vehicle. That was, you know, one of the things I kind of said with little asterisks in this morning's meeting. But you got this 144 as a really big level, and you got a big upgrade this morning. I forget who it was that upgraded it, but you know, so the upgrade puts it in play through a big technical level. So you've got kind of a breakaway gap here above 144. Proper stop loss, I think, would either be kind of yesterday's high. That's my preferred stop. I also don't hate the idea, even though I know this might have shaken you out, of just using 143.99 as a stop loss. Honestly, if you bought off the open and you got stopped out at the absolute bottom tick low here, which is 143.99, I actually think you did a good job. It's unfortunate, but we have to manage risk. My preferred stop would have been more like yesterday's high, which is only an extra few pennies, and that actually would have held, which is 143.94. So, you know, if you bought this potential breakaway gap here in Walmart on the upgrade, on the gap above resistance, that's what we call a breakaway gap. We just talked about this in an afternoon meeting recently. I forget which stock we were talking about, but breakaway gaps tend to lead to gap and go situations as opposed to common gaps, which typically do not. Walmart, breakaway gap, did not fill its gap, led to a gap and go, rallied well with the market in the last 5 minutes of the day. This is another one. Beautiful candle here. So if anyone bought this is another one that you easily could have swung. This could easily be a swing trade as of today's close. So awesome job, I think, as a team today. You know, our research really came together. Basically all of our ideas from the morning meeting were really solid, worked out really well. Guys caught them, so I'm really happy about all that. For me, a big focus was still the day 2 on this AMD. We went over AMD in detail in yesterday's afternoon meeting, kind of what the trade was, what the execution was. I mentioned I swung it to the short side, and then we spoke about 117 quarter. 117 quarter is a spot that needed to break. Yesterday, during the day, it was kind of intraday support, and then pre-market this morning, they were really trying to hold that 117 quarter. And pretty quickly off the open, they broke it. I know some guys are trying to short this right off the open this morning, and I support that, you know, through 117 quarter. The problem it was, if you were trying to short this through 117 quarter off the open, which I wasn't doing, I didn't take an ad in this. I just kept the stock that I swung to the short side from yesterday just to continue my trade from yesterday, and I kind of traded it back and forth in some areas on the way down, but never getting heavier than the core position that I actually swung. And this is also, you know, a brief little lesson that we can talk about here. There's a big difference, I think, between adding stock and adding back stock, right? So adding stock is putting on risk. It's putting on additional tier size. If I do that, I do that as a new trade. So if I had shorted through like 117 quarter today, this morning, which I did not do, I would not let that impact the stock that I was swinging that I'm well in the money from yesterday. I treat them basically as two completely separate trades from a risk management purpose. So if I shorted 117 quarter and I got stopped out on one of these upside tails here early on in the day, I'm not letting that get me stopped out on the stock that I already have. I view it, again, basically as just two more or less separate trades. I took my risk on my short at 117 quarter. I got stopped out. I lost on that, but I'm not going to let that impact the stock that I have from better prices that I'm going to continue to trade based on the game plan of the original trade that I had. So I always treat that separately. So that would be, if I added, that would be adding, right? That's like a new trade, new risk or additional risk, as opposed to adding back, which is, you know, I think I covered some stock at 115 quarter today, and then I think I re-shorted it at 116 quarter. I did not take an ad. I just, let's say I covered 100 shares at 115 quarter, and I re-short that stock back at 116 quarter. I'm taking my core position back, and I'm keeping that, in this case, because if it's 100 shares, $100 basically. So that's kind of what I was doing in a couple instances. You know, this thing came down. I think I did that actually a couple of times. I covered 115 quarter here. I re-shorted that on the way up, 116 quarter. Again, for me, my stop loss, I mentioned this in yesterday's afternoon meeting. At this point, I'm still giving it all the way to yesterday's high.
NDIO. Yes.
Yeah, I see that. I see it ripping up. I sold some stock already. I sold some stock while chatting with you guys and doing the afternoon meeting. So for me, originally, it was just my core position that I was still giving all the way to yesterday's high. I covered some of that at 115 quarter. I reshorted that stock at 116 quarter. I covered it again at 115 quarter. I reshorted it at 116 quarter. I covered it again at 115 quarter. I got continuation on my trade. That is adding back stock from my core position as opposed to taking a new ad, which I wasn't doing in this. I know some of you guys tried to short through that 117 quarter off the open. The problem with that is the stop loss. I don't know where you're giving that to. You know, if you're really the right stop, and I think I said this out loud initially, would have probably been 119, somewhere around a full gap fill. If you're using this opening high, and I know I spoke about this I think in an afternoon meeting last week, just using the opening high is very difficult there because you have a high probability of getting shaken out and your trade's still working. I think Sharir was in a trade last week that we were talking about that I think he got shaken out of a stock, and we kind of used that as an opportunity to talk about the importance of the ADMA and that equilibrium area with the utilization of your stop losses. If in this case, a lower band of equilibrium, because it's stock that's moving down and I'm short it, has not caught up yet to the pivot, you are purely relying on momentum to pay you, which means that you have a higher probability of getting shaken out of a trade that could work. And that's kind of what happened here for anyone who, if you shorted that, 117 quarter right off the open, you got this huge fast break, and like, all right, I can use the high of the day as my out. High of the day was 117.64. High on this next bar here is 117.68. You literally got shaken out at the absolute high by 4 cents. But this is what tends to happen if the ADMA on that time frame hasn't caught up to that stop yet. So for me, for my trade, my original stop, I never took an ad, so it'd be different for anyone who actually shorted at 117 quarter today. I didn't take an ad. My stop is still yesterday's high from my trade from yesterday. I eventually lowered my stop to today's high, but only after these moving averages had totally caught up and new lows actually came in. So I brought my stop loss down from yesterday's high to today's high to lock in money for myself. Now I'm definitely in a win-win situation. I'm making money no matter what. Basically at 950 today. The ADMA is now trading below on this time frame the high of the day. New lows came in, so now at least on a very small time frame here, I'm established with a downtrend. Right, I've got a low, a high, a lower low, and then eventually a lower high, another lower low. Again, that's the definition of trend here, and we're able to get really solid continuation on that. My price target was the area between 110 and 111. I basically told you guys my game plan. I was covering some stock more or less every dollar on the way down to my price target. You definitely could be greedier. The ADMA on the daily chart now is at 108. There's room easily for this thing to come down to this 108, 109 area. If not, if you want to be even more greedy, your 21 EMA, the lower band of equilibrium, is all the way down to 99. It's definitely reasonable for AMD to have a pullback to 102, 102.50. But I said from the beginning, this is a very strong stock. I have a very specific trade here. This is not an easy money trade by any means, by the way. This is a hard money trade. Trading counter trend, just to take a half step back, guys, trading counter trend and counter momentum is hard money. It's not stress-free money. For the most part, you are almost always going to be better off trading with the trend, with the direction of the stock, with the direction of the momentum. You're going to have much better risk rewards for the most part doing that. You're going to have a much higher probability of success doing that. The market's going to be much more forgiving on your mistakes when you're with the trend than when you're against the trend. That's the easier money. That's what I am constantly trying to do most of the time. It's not what I always do. And in this case, definitely went after the hard money, but I'm not trying to be too greedy with it. Was still able to get a fantastic risk reward by having a really good price from yesterday. Or if I can just get a move down to 110, not even all the way to the ADMA on the daily chart, not even all the way to this upper band of equilibrium, it's going to be a solid risk reward for me. It's going to be good money for me, and I'm going to be out of the way. So It was really had a price target here of, somewhere between 110 and 111. It got really close. Low of the day here is 111.59. I had a bid actually at 111.25 at one point just to get out. And then, it pulled back into the close. It's not worth it to me to risk giving this thing all the way back now to make an extra $1 on it. I got out of the rest of my position, somewhere above 112 into the close. So I'm now flat on AMD, and it was a really solid 2-day trade that I got out of into the close. And that's basically it. Besides that, just kind of continuing to manage my swing positions. That SoFi pullback is a little bit disappointing. It pulled back a little bit more than I would like. Really would have loved to see SoFi kind of hold above or at least close above the 21 EMA again today, this 116.25. I have no problem with it taking a rest into this, they call it, did I just say 116.25? I wish SoFi was at 116.25. I'd be up like $1 million in my position. 16.25. Not a surprise after a big day to see this thing pull back from 1650, which is kind of daily chart resistance. I just really want to see this thing actually hold up above definitely $16, and ideally really more like this 21 EMA. Let this 8 EMA curl up, eventually let them cross. Let's get this thing above 1650. Let's see a move to our next resistance levels, which I think first I'm looking at $18, then I'm looking at $20 on the upside. And I will definitely still have stock if we get this full move here and this thing holds this base and rounds up or whatever it is. I know we got earnings coming up soon. We got earnings in a week from today, but at least at this point, my game plan is I will still have stock at $20 in this thing for sure. So we'll see if that one's able to continue higher. Definitely a little bit of a struggle today. That's basically it. Really good job as a team today with our morning meeting. Really good job with some of our picks, our follow through, our trading as a group. The communication in the ProDesk virtual trading floor has been phenomenal in here. So I love the communication. Let's keep that up. And with that said, I'm happy to answer any questions that you guys have. So I'm going to scroll up here in the virtual trading floor, ProDesk VTF. It's going up to about 10 after 4 here to see if there was any questions. Yeah, someone asking about hotkeys for Lightspeed. I'm going to direct those questions to Pat. Reach out to Patrick on software questions. He honestly knows the software much better than I do. That is not my area of expertise. It is still giving choppy audio into the VTF. Yeah, I got to talk to the tech team over here. I tried restarting my computer today to see if that could have better audio for the VTF. It sounds like it's good audio for the YouTube, but for some reason it's messing up my audio in the VTF, and I guess restarting my computer did not fix it. So I got to speak to the tech team over here the next time those guys actually show up at the office. All right, looks like the first real question here is from TJ asking about Affirm, AFRM. Is it dead? Or if we break 70 again, can we get between 70 and 80 for a swing? It's definitely not dead. It's definitely not dead. Again, you got to understand extension. And this is what I was talking about. I think someone asked me about this stock in the morning meeting either yesterday or the day before yesterday. And I said, look, $70 is your level, but it's too extended into it. I think yesterday when it was going after 70, or maybe that was even today, I don't remember. It was going after 70. I was like, I don't want this to break 70 right now. It's too extended. We just spoke about this, I think, in an afternoon meeting a day or two ago as a lesson. If you are buying a stock that is extended on the time frame, you have a lower probability of success. $70 is the breakout for this Affirm. ADMA is at 64. So you're talking about a $70 stock that is extended to the upside by $6. This thing's extended by like 8-9% on the daily chart off of that equilibrium. It's too much. So if you're buying $70 when it's that extended, you're going to have a lower probability of success on this thing. It is not broken by any means. It still looks good. I would have greatly preferred today's range to be tighter. Today's range is pretty big. It's probably because they shook people in above $70 and then all those people had to puke their stock out below 70. But I would love this thing to just continue to consolidate, build out some sort of wedge pattern here in front of 70, let these moving averages catch up a little bit more so it's not so extended, and then we can go after $70 in such a way for a real momentum breakout. And you don't have that degree of extension, you're going to have a higher probability of success. So this thing at this point is by no means dead. If it starts, getting back below 62, then it's garbage. But for now, I think that this thing looks fine. You just got to be patient. Charts need to set up. You had a big move here from $56 to $70 in 2 trading sessions. Stocks work in periods of expansion and consolidation over time. This was an expansion move. Now we want the consolidation move that can give us the setup for the next expansion move, ideally through 70, because that would be like a very clear level there. So I think that Affirm looks good. You just gotta, you gotta be patient. The market's not going to go. Stocks in the market are not going to go when you want them to go. They're going to go when they want to go. So that's why we're focusing on listening to the message that the market is telling us and not trying to apply our wants, our thoughts, our needs onto the market, because that just does not work out. Scrolling down here, any new thinking on BOEX? Yeah, we could talk about BOEX a little bit. So, BOEX is my heaviest position right now. Technically, it looks like garbage, but this has never been a technical trade for me. BOEX is supposed to become WeWork. It's a SPAC. The vote's not done yet. The deal here, the vote and the deal are supposed to happen sometime in Q3 of 2021. I haven't seen any clarity on this. It's so interesting to me how low the volume is on this thing on typical days. And it seems like no one even knows that WeWork is supposed to go public through a SPAC. I've laid out a couple of times already in the past my bullish thesis on WeWork. WeWork was, I was the person screaming from the rafters about shorting the WeWork IPO when it was trying to go public at a $60 billion valuation. It was a garbage company with a garbage CEO at a ridiculous price. I wanted to short that thing to zero so bad. I think the story here has totally changed. WeWork is supposed to go public through a SPAC merger with BOEX here, so this is supposed to become WeWork. Now it's like a $9 billion valuation instead of a $60 billion valuation. They got rid of that awful CEO that they had and replaced him with an excellent CEO who has a lot of experience in real estate. I think he was a managing partner at GGP in the past. He has restructured all or at least a majority of the bad deals that they had in place, for real estate. And I also think this is all happening at a time when this business is better situated than it's ever been in the past, where I think that you're going to start seeing from WeWork at some point a lot of deals being announced with corporations who don't want to have office space anymore. And I've been using T3 here as a perfect example. It doesn't make any sense for T3 Trading Group to have offices anymore, in my opinion. And this is, I've always been an office guy. I've been with T3 for over a decade. I've come to our downtown Manhattan, One State Street Plaza office for over a decade, every single day until COVID hit. We shut down our offices, we sent everybody remote. I was very nervous about it. Are we going to be able to properly do learning and training and development for new professional traders joining the company if we don't have an office? I was very concerned about it, and I couldn't have been more wrong. The transition to getting everybody remote was pretty seamless. We turned all of our training into online training. We're using this virtual trading floor system. And what happened? The communication amongst our group is better than it's ever been. The performance in the group is better than it's ever been. And that's what I care about. So now I'm looking at this huge office around me where I'm like the only person here because we're not letting traders back in yet because of COVID. Just people who have other roles at the company like myself are able to be in the office right now. I got this huge trading floor. We have all these empty computers, empty seats. There's no one here. Why do we have this? Well, there is definitely a benefit to some camaraderie and still seeing people in person from time to time. But we don't need this like this where we're paying all this money to be here. But I think it'd be great for T3 to get rid of this lease and then maybe a week, a quarter, rent out a WeWork and bring the whole trading desk through. Anyone wants to come, so we can all, get some interpersonal relationships going on, get a little hands-on experience with each other a little bit. I'd be hugely supportive of that. Obviously, pitching that to management is a different conversation, but I think that that's what a lot of companies are going to be able to do. So I think that this WeWork as a company is better positioned than it's ever been, but it seems like no one knows that they're going public. The SPAC volume here is disgusting, and now, honestly, to my somewhat disbelief, it's trading at $10. So what the market is telling us for BOEX right now is that WeWork is worth nothing above the cash that BOEX has, which to me blows my mind. I added today. I bought more today. There's really weird price action that's been going on here. It's been very heavy on the way down. Look at this price action these last couple of days. There is a buyer, and that buyer has been here for a couple of days, and he just sits on the bid. You just see him, it's a refreshing buyer on the bid at 10.10 for the last 2 days, and then today he just stepped that back down to $10 because he was able to. But the interesting part is this buyer, someone just is hitting him. Someone is just sitting there hitting this refreshing buyer all day at $10.10 the last couple of days, at $10 today. There was a couple big out-of-market block trades that went off. Today, 100,000 shares, 300,000 shares, 100,000 shares. I saw another 50,000 share offer going to the close. This name has been very thin, but now I upticked at one point an amount of stock that I'm not supposed to tell my exact tier sizes for compliance reasons, but I upticked an amount of stock in BOEX today that at any other point in this thing's trading would have caused the whole stock to have a huge kind of uptick higher on it, and it didn't even uptick a penny off my ad today. And I took the offer on it too. I did that on purpose because I wanted to feel what the liquidity felt like on the offer. So my thesis is still intact. The price action here is definitely concerning. I don't know if they're trying to price in the fact that maybe this deal is going to get voted out. But if it's going to get voted out, I mean, then you get the cash of the stock, right? Which is $10 minus fees. So I think we're seeing like $9.75 really. So for me, the risk on that, I will be more than happy to take a loss at $9.75 if no deal gets done on this thing, and lose my money, because I think that if this actually truly does become WeWork, and WeWork announces that they're planning on becoming profitable, I mean, just look at the valuation that Robinhood's trading on right now with the move that it gave, yesterday and today, or last couple of days. I still think I'm looking at a $20 stock in WeWork when it happens. So my thesis hasn't changed. I'm sticking with this 100%. I'm adding at $10. It's what I'm doing with it. This is not a technical trade. I've said that from the beginning. I first was buying this when the deal was first announced on this day above $10. Did take some ads at a little bit worse prices on the way down here. So my price is definitely not my original price anymore, but I'm plenty happy with my risk. I'm plenty happy with my position. And like I've said from the beginning, this is not a technical analysis trade. This is a fundamental play here on this SPAC going public. But the market's been punishing SPACs to begin with. All those SPACs recently, just by nature of it being SPAC, has just been getting hit down, hit down, hit down. This thing, it needs the deal to come through, is what needs to happen, and that needs to happen already, because otherwise it's just kind of been bleeding out right now. So we'll see what happens. So my game plan's still the same. I'm still sitting with it. I added. Robert here, do you see any technical signals on Microsoft? Microsoft 287.30 game plan price without giving it all the way down to the low of the day. So I think you're talking about a buy for today, 287.30. 287.30. I don't really see anything for 287.30 specifically. It's not even yesterday's high. I think, let me take a look at this daily area again. Got a high at, okay, 287.23. Yesterday's high was 287.60. This other high here is 286.75. So the area is a little bit sloppy. It's kind of this, I guess, 287.30 area, like you're saying. I remember looking at Microsoft like 10 minutes into the day and saying I wasn't interested in it. because of the relative strength, relative weakness factor that I spoke about earlier on in the meeting. I really thought that the IWM was going to be relatively strong today and that the Qs are going to be weak. So I was right about that. And then when I saw this topping type tail here on the second bar of the day to me that just meant there's nothing to do here. This is not trading correctly for follow through. So I saw the second bar of the day and said I don't want anything to do with this. So I'm not sure if you were buying on the second bar of the day on the way up, which I don't hate, though there was not great volume on it. If you were buying after the second bar of the day below that price, I really don't like that, because I think that this second candle is telling you that today's not the day. Until this tail gets negated. When this tail gets negated and the stock's getting above that here, then actually maybe you do have something to bite onto. But then you got to be buying this price. You got to be buying 287.60, and then what do you use as a stop loss? You basically have to be using this low or the low of the day, and then you got to be asking yourself if the risk reward is worth it. And the answer is maybe, actually. You know, the risk reward on buying 287.60 versus 286.30, taking on $1.50 or so worth of risk, might actually be worth it if you're thinking big picture on this as like a cheat off of a breakthrough 290, that you could be getting multiple dollars of upside because it's at all-time highs and it's breaking out a bullish pattern as the Qs are breaking out a bullish pattern. So then it might be worth it. But honestly, for me, after the second candle, it's just off my radar. So I had no reason to look at this again unless we saw option flow come in, or unless one of you guys communicated it to me through the virtual trading floor. And we did see option flow come into the close in this, I'm pretty sure. So that's it. So that's Microsoft there. So not really, Robert. Definitely did not love that intraday action. Andrew K here in the VTF asking about NEGG. I gave back some profits trying to buy the pullback. Yeah, I mean, this stock's insane. This thing's insane. This move on it was nuts, then it came all the way back down to this area here, so almost retraced like 100% of the initial move. I don't know what put this in play today. Maybe someone can confirm if there was news that came out around 2:45 or if this was just a technical break. I really don't know. So what are you saying that you did here? How did I just lose your? Oh, there it is, Andrew. I gave some profits back trying to buy the pullback. I'm not really sure. Your question's not really specific enough for me to be able to provide you too much feedback. Like when you're saying you're buying the pullback, you buying here when it's touching the 80 MA? Are you buying after this candle because it's a little bit of a hammer into equilibrium? I actually kind of like this trade here. I don't like the stock. I probably wouldn't have traded it just because of the stock, but I like the technical setup off this candle. That would make sense to me to try to buy versus this low, in which case obviously we get stopped out. And then this one I don't like as much because now it looks a little bit more broken to me. So the only trade as far as a pullback off of this move that I like would have been buying after this candle to see if this can become a higher low off the initial move to work its way back to highs. Anywhere else in here, you know, I'm not buying just because it's a moving average. I'm not buying after a negative Maribozu on this candlestick. You know, when your stock is extended and it pulls back into the equilibrium area, you're looking for a technical signal to buy. There's no technical signal anywhere with the exception of this candle. This candle is what you want to look at. If you took this trade, you got stopped out, I think it's a good trade to be involved in, and it just didn't work out. And that's how trading works, right? We are looking for spots where we can keep our risk tight, looking for further reward. So that is NEGG. Jorge Garcia on YouTube. What do you think of AMD as a short overnight? Well, Jorge, I went through that already. Spent a lot of time already in this meeting talking about AMD. I got out of my AMD short that I have from yesterday. There is still further room to the downside for sure, all the way down to 108. I think 108 is a reasonable pullback in this thing. My price target was really 110. So for me, it's not worth it anymore for me to continue to hold this from a risk-reward perspective. You got to ask yourself what your price is. If you're short from a good price, if you're short from probably anything above 117, it makes sense to me to continue to hold this short overnight. If you're asking me, hey, I'm thinking about hitting the bid now into the close at 112, 113 for an overnight short, I don't like that at all. Your risk reward shorting at like 113 and keeping it overnight is not good, because you really have to give it all the way to highs here, or at least today's high, and risk $4.50 on this for what kind of reward potential at this point, maybe that same amount, you know, like $3, $4. So I really don't like it unless, for a short overnight, unless you've got a good price with a good profit cushion. It is still a counter trend trade. So for me, if I'm trading counter trend or counter momentum, like being short AMD, I am going to utilize a game plan that is significantly less greedy than a game plan for when I'm with the trend. So that'd be the answer to that. But Gabriel, for Bullocks, I'm honestly looking for a move to the low 20s in it. That hasn't changed, but it's going to be when WeWork comes over. Yeah, Rob, but they restructured all that. I'm pretty sure, like the really bad real estate that wasn't performing, that was highly priced office space. The new CEO's come in and has restructured like all of that. Andrew K asking about MRIN. Whew. Yeah, I don't know. You need a signal here. I do not like that this thing tried to go on July 30th and then gave an inside day and down and broke that low. This never should have gotten below this Maribozu low. It did. To me, that puts MRIN in the penalty box. I don't want anything to do with this until it proves itself to me again. Otherwise, you're just kind of buying and hoping it can do this kind of move. So, you know, you got to wait for that. And I know it tried to go here today, so if you were watching it, this actually could have been a good catalyst to try to buy. I think you actually were asking me about it in real time. I said you could go long versus this low, but I don't like the lack of follow through here, even intraday. I don't think that this thing closed well. So for me, you know, I like the idea of trying this today based off this intraday price action, but I think you needed a better close, at least 6/4 or better as a close. So then you would have maybe a pickup in volume and a decent looking candle here and a good profit cushion. If you're long versus this like 595 here, hoping that this is the catalyst, it's going to set it off again, but then it only closed at 611, it's just telling you that it's still not ready yet, I think. So, you know, I think you can keep an eye on it. It obviously could be a big mover, but I don't like the close. I don't like that price action there. Brant here. Have we seen any of these SPAC merger votes fail? Not that I've seen. You know, you have all the incentives of everybody are in line to get it to work. You want WeWork's going to want to get it done. Both. Oh, you know, the only one that we've really seen fail, if you even want to call it that, is Bill Ackman's. Which I forget the symbol of that off the top of my head. But he was doing, you know, I mean, look, I was saying it for a while. When the SPACs were all going crazy at the beginning of last year or beginning of this year, I was saying these things are garbage. There are not enough companies out there for the amount of SPACs that exist. And then the problem is all the SPAC managers have perverse incentives. The SPAC managers want to get a deal done even if it's with a garbage company that's going to be worth less than the SPAC price itself, because that's how they're going to make money. You know, it goes back to my favorite saying, I think I've said it like every afternoon meeting this week, from Charlie Munger. The older I get, the more I understand incentives drive everything. Understand what is the incentive of the SPAC merger, the SPAC product. It's to get a deal done by the managers. They're not trying to get a deal done that's going to return necessarily the most shareholder value. They want to get the deal done so they can collect the most amount of fees. So the Bill Ackman one fell apart, but it was a wacky thing where he was trying to do like part of the SPAC for whatever it was, that Warner Music or whatever. I think it wasn't even like legal what he was trying to do. So I think that one kind of fell apart, and his SPAC hasn't been the same since. I don't know if someone can remind me what that symbol is. So you know, we'll see. What is it?
PSTH.
PSTH. Yeah, look at this thing getting punished also at $20 now just because it's got Bill Ackman's name on it. This guy can't get a deal done because the legit companies for the most part aren't going to want to go SPAC anyway. They'll do direct listing or a traditional IPO process. I mean, even you're seeing it even now, right? The Robinhood SPAC, the Duolingo SPAC. I know we had the I didn't even type it up, but we had the barbecue company IPO today. How come that they didn't SPAC? because they would rather do an IPO. It's going to be better for them. They're going to raise money. They're going to get more recognition from it than SPACing. For a company like WeWork, a SPAC makes sense because they're going to be able to raise cash, and they had a lot of kind of negative press going on, you know, based off that last
LCID failed
attempt.
Failed on the first vote, but then they re-voted it.
Which one did?
LCIV when it was CCIV.
LCIV, when CCIV. Josh is saying over here, I don't know if you guys can hear him, that Lucid or CCIV or whatever failed on the first vote, and then they got it done.
Yeah.
But this PSTH, I mean, I think that this is where, I forget actually where they announced that weird deal he was trying to do, and then that failed, and this thing's been bleeding out ever since. No problem, ET. Thoughts on a stop for BOEX? I don't have a stop for BOEX. Again, it's not a technical trade for me, so you got to, you know, kind of take it for what it's worth. I'm waiting for the deal to go through. I want to see how this trades. You know, I want to see people start recognizing what this thing is. I want to see that next earnings report. I want to see that CEO get on TV and talk about the things that he's done to turn this company around. So that's what I'm looking for. You know, if you really feel like you need a stop loss, I probably would use $9.60. Gabriel asking, what is a SPAC? A SPAC is a special purpose acquisition vehicle. It's after 5 o'clock, so I'm not going to get into too much details on it. But it's basically like a blank check company almost, and the purpose of it is it makes it faster and easier potentially for a company that's out there to go public, where you don't have to go through the traditional IPO underwriting process. You just merge with a special purpose acquisition vehicle, and you are able to raise cash through that and through a pipe deal that occurs at the same time. The pipe deal is actually key to the SPAC going through, and the only thing that in some ways is keeping potentially some really garbage companies from merging with SPACs is that they can't get the pipe part of it done for the cash in order to get the deal done. Yeah. Okay, gang. So it's after 5 o'clock. I think we covered a lot of stuff today. Great day today. I'm having a fantastic week. It sounds like a lot of you guys are having a fantastic week also. Virtual trading floor has been on fire. So anybody who's not involved with us, who happens to be listening on YouTube or whatever, reach out to your T3 Live rep. Get involved with the ProDesk virtual trading floor. It's an awesome team that is almost entirely comprised of professional traders. I will see everybody tomorrow morning, where we'll be doing our morning meeting and doing all our usual stuff and getting our ideas out there for the day and setting up with our game plan. So keep up the great work, everybody, and have a great night. Boom. Oh wait, I'm still on.